Imagine a charismatic founder convincing some of the world's biggest investors to pour over $10 billion into his company, a unicorn startup hailed as a game-changer in commercial real estate. A company that grew from a single co-working space to a $47 billion global brand in under a decade, only to see its value nosedive more than 80% within weeks. This is the story of WeWork, one of the most spectacular startup debacles in history. Thank you for joining us on Profit Chronicles. In today's episode, we'll chart WeWork's meteoric rise as a real estate unicorn. It all starts with WeWork founder Adam Newman. Adam Newman's path to tech stardom began humbly on an Israeli kibbutz in the late 1970s. The commune life instilled in him utopian ideals that would later shape his vision for WeWork. In 2001, Newman moved to New York City with his sister, following her modeling dreams. The dot-com boom was in full swing, and Newman saw opportunity in the city's bubbly startup scene. Newman enrolled at Baruch College and tried his hand at various ventures like importing baby clothes from Israel. But startups were his real passion. He co-founded a failed women's shoe company called Crawlers before meeting Miguel McKelvey in 2005. Together, Newman and McKelvey started Green Desk in 2008, a pioneer in eco-friendly shared office spaces. While it flamed out in the recession, Green Desk proved the demand for flexible workspaces. Drawing on this experience, the duo founded WeWork in 2010 with a grander mission. They promised to humanize work and create a new physical social network through trendy, community-driven offices. Newman was the evangelist preaching this vision to attract investors, while McKelvey handled the real estate logistics. WeWork leased floors in buildings, renovated them into hip workspaces, and rented them out desk by desk or as private offices. Revenue came from the membership fees paid by tenants. It was a simple business model, but executed slickly. Newman added eccentric flourishes like free beer on tap, arcade games, and motivational posters to make WeWork feel more like a social club than an office. Members responded enthusiastically. WeWork took off like wildfire, expanding to 20 cities in just 2 years. Newman successfully pitched investors on his idealistic goal to transform workplace culture, helping WeWork raise over $10 billion by 2019. However, Newman ruled WeWork chaotically and indulged in serious self-dealing. But for a brief moment, the wide-eyed kibbutz kid looked like he would change the world of work as we know it. Love him or hate him, Newman's rise and dramatic fall at the helm of WeWork was nothing short of astonishing. Newman's initial goal of revolutionizing office real estate by providing chic, flexible workspaces for startups, entrepreneurs, and companies of all sizes was admirable. His flair for slick branding and boundless enthusiasm quickly attracted investors who poured billions into the company. By 2019, WeWork was valued at a whopping $47 billion, making Newman one of the most successful entrepreneurs of his generation on paper. WeWork CEO Adam Newman had a reputation for partying as hard as he worked. His over-the-top antics and cult leader persona contributed to WeWork's bureau culture and his eventual downfall. According to reports, tequila-loving Newman encouraged alcohol consumption during meetings and would make outrageous proclamations like wanting to become president of the world. His wife and WeWork co-founder, Rebecca Newman, also enforced a rigid, controlling management style that employees branded as watching Big Brother. Newman had a habit of plucking shots of his favorite $140 a bottle Don Julio 1942 tequila from the minibar during meetings. He even insisted that trays of empty shot glasses be brought to investor meetings to show his hard partying ways. While Newman's zealous personality attracted investors initially, his unchecked behavior, mismanagement, and self-dealing ultimately made him entirely unfit to lead a public company. WeWork changed office culture, for better or worse. Love it or hate it, WeWork undoubtedly transformed attitudes about the modern workplace after its founding in 2010. Its hip co-working spaces made stale corporate offices seem antiquated overnight. WeWork popularized open floor plans, vibrant interiors, and amenities like ping-pong tables and kombucha on tap. At its peak in 2019, WeWork was the largest private office tenant in places like New York and London, giving it an outsized influence on those property markets. Its rapid expansion also disrupted the stodgy old boys network of commercial real estate, but WeWork's work hard, play hard mantra promoted a frat house culture that tolerated excesses like tequila-soaked meetings. So while WeWork shook up workplace design and culture, its bro-ish influence wasn't entirely positive. WeWork made casual Fridays too casual. Companies would be wise to adopt some of its aesthetic without embracing its substance abuse and mismanagement. WeWork expanded at breakneck speed, fueled by billions in capital from starry-eyed investors like SoftBank. By 2014, WeWork had opened 34 locations and achieved a valuation of $1.5 billion. Just a year later, the company had 53 offices and was valued at $5 billion. In 2017, after raising $4.4 billion from SoftBank, WeWork's valuation leapt to $20 billion despite losing $219,000 per employee that year. I mean, my goodness, losing over $200,000 per employee is never a good sign. SoftBank continued pouring gasoline on the fire, investing $6 billion in WeWork in 2018 to pump its valuation up to $47 billion. But this figure was utterly delusional, as evidenced by WeWork's failed IPO in 2019, which plunged its value down to $10 billion. It seems pretty clear that WeWork was never worth anything close to $47 billion. In 2019, WeWork paid Newman $5.9 million to license the We trademark, allowing him to make millions from his own company. In August 2019, WeWork's IPO prospectus revealed Newman's lavish spending, conflicts of interest, and questionable corporate governance. Investors were shocked to learn that this tech company was just an over-leveraged real estate rental firm. The backlash was swift. WeWork's valuation plunged to as low as $10 billion as investors got cold feet. SoftBank pressured Newman to delay the IPO to stop the bleeding. Critics blasted WeWork's model of losing money to grow at all costs as unsustainable. Its breakneck expansion was fueled by mountains of debt and hyped-up projections. By September 2019, it was clear the IPO was doomed. After the failed IPO, SoftBank eventually bailed out the sinking ship with a $9.5 billion package in October 2019. Newman was forced out as CEO, but still walked away with a ridiculous $1.7 billion golden parachute. Absolutely outrageous. WeWork withdrew its IPO registration in late September as investors refused to buy the company's delusional $47 billion valuation. Newman's ouster marked the end of WeWork's go-go growth story. The failed IPO punctured the bubble and exposed WeWork as a financial house of cards propped up by mountains of debt and hype. Its meteoric valuation was built on his cult of personality, not sound business practices. Newman's greed and incompetence ruined what could have been a solid business. In 2023, WeWork's inevitable day of judgment arrived. With losses still ballooning and debt mounting, the company filed for Chapter 11 bankruptcy in November 2023. WeWork's stock plunged to just 84 cents per share, valuing the company at a paltry $44.5 million. Quite a fall from a $47 billion unicorn to bankrupt has been in just 4 years. WeWork is a cautionary tale of how easy money and hubris can fuel delusional growth. The company expanded recklessly without any path to profitability. Reality eventually caught up. It's clear that WeWork's ridiculous valuation was always a house of cards built on flimsy foundations. Its bankruptcy was inevitable once the music stopped and investors abandoned the party in 2019. Newman is the embodiment of Silicon Valley's fake it till you make it ethos. He had expansive dreams that inspired legions of followers, but his disregard for fundamentals like profitability, corporate governance, and reasonable valuation ultimately led to WeWork's implosion. While Newman's talents as a salesman and fundraiser fueled WeWork's meteoric rise, his self-indulgent leadership and lack of discipline eventually caused its downfall. Adam Newman's legacy will likely be a cautionary tale of ambition unchecked. He had the vision, but not the grounding to build something lasting. His story illustrates the fine line between genius and chaos that the most successful leaders must walk. Newman clearly had talent, but he lacked the rigor and wisdom to channel his abilities in a responsible and ethical manner that could result in establishing a solid foundation for his business, one based on sound business fundamentals as opposed to rhetoric and unsubstantiated, financially unsound hype. The real losers here, though, were investors and employees, as at the end of the day, Newman got to live an irresponsible playboy's life for many years and then walked away with a golden parachute, making him a billionaire. Doesn't quite seem right, does it? Its story is an object lesson in how quickly fortune turns when illusion collides with reality. WeWork's dramatic collapse teaches us that visionary rhetoric and sky-high valuations can never replace sound business fundamentals. If you enjoyed this video, don't forget to like and subscribe to Profit Chronicles for more of the same. And if you think WeWork is a classic example of greed and ego unchecked, you won't want to miss this video here. It makes WeWork's downfall look like child's play. Thank you for watching.